Hello, welcome back. A subscriber of the channel asked to take a look at Wix.com and its stock. And it's very, very interesting because it seems to be a Shopify competitor. And so we have examined Shopify, and I'm linking to this video in the description box below. You can find a link if you like to watch that. And it may be beneficial for us to at least take a look at some competitors. And this one seems to be a competitor that has been increasing its stock price for the most part in the last sort of like couple of years or so. Yet also had a massive slump over here and went down a lot from almost 360 here, it looks like, down to 120 right now. So a massive steep decline here, almost 60%. And this is something that I've mentioned in previous videos that you can expect, especially with companies that are overpriced. And so we will examine whether that's the case here, but you will see that a lot in this kind of market. A lot of the companies that have enjoyed massive hype and have been increasingly more and more overvalued, all of a sudden they have a steep decline. And then that doesn't mean that it would continue forever, of course. And it could very well go back up. And the fact that I do like about this one in terms of a little bit of a technical aspect here is that it's approaching its support levels. Over here, I guess, are the lowest support levels, but over here you can find support levels at around 110, 112. And in case you don't know what support is, it's prices, its previous stock prices that the company has hit some time ago, and they act sort of like a support because people and traders mainly see these prices and they see the chart and they're like, okay, people bought here and the stock went up. And so this may sound a little bit weird and a little bit of an oracle type action, but remember, trading is a lot about psychology, and traders are people. At least in a lot of the traders are people. There's also like high frequency trading and all that, which is automatic. But even that is actually based on these kinds of principles, because support is important. I mean, it kind of gives a psychological support for people to potentially think, okay, this is when I'm buying, and may as well have played a role for this massive pump up here, because it actually reached the support level on Friday. It was 110. All right. So let's take a little bit of a closer look at the financials now, because we want to examine the company as a fundamental buy and not really as a trade, which I think is actually a very, very interesting right here to actually trade this company. Okay, so the company has 57 million shares that is trading, and has been having quite some increase in terms of its stock float, its outstanding shares, which means that they are diluting investors kind of slowly, but still they seem to be diluting the investors in the past 5 years. Bear that in mind. I mean, this is not great for investors. And also they have a very, very low float and outstanding shares count here. And that means that the company's stock price can actually move massively during the day. This is why you're looking at moves that are like 10% over here. It happens a lot when you're looking at low float stocks as we call them, just because there aren't too many stocks to trade, and thus the movements are tend to be steeper daily on the daily chart. So the company seems to be having an short interest rate that is increasing, is about 7%, but is it increasing? Actually, it is, yes, and it is sitting at 7%. Typically, at 10% or more kind of enters a territory where people really short the stock and could also be primed for a short squeeze in some situations. Okay, let's take a closer look at the financials of the company now that we examined some of the general aspects. The income of the company, and an year-over-year growth of 46, 41, it's about 30 to 35% now, seems to be increasing as well. And what about the net income of the company here? The net income of the company is negative, but close to zero. So they seem to be approaching profitability here, which is a big step actually. And this is something that I like, because when you're approaching profitability and things turn, typically companies tend to get a little bit of a boost. So this is interesting. What about the balance sheet of the company? The total assets of the company also increasing. Nice to see. What about the liabilities? The company has almost $2 billion in terms of its total liabilities, and the total equity is actually decreasing from 2020. They almost have no equity here in terms of the total equity of the company. And $2 billion in liabilities, that's a lot when you compare it to equity. Okay, so they need to be getting some profitability soon, otherwise they will have to finance themselves. And let's take a look at how they are financing themselves right now. So cash from operations, they are positive here. Okay, and cash from investing, they actually sold some equities here, and not much movement here. Okay, that's normal. But I want to see the financing. Yeah, so the financing one, they actually issued some debt back in 2020, and then they actually repurchased stock here, which is interesting. And they did it in the last 12 months just because I guess there's this massive decline in the stock price. So I guess that makes some sense. But they haven't been issuing shares lately, and they haven't been getting debt as well, which means that since their balance sheet is going down, and they have a lot of liabilities, like $2 billion that we examined here. I'm assuming that they will either very, very quickly need to fix the free cash flow here, or get some debt, or actually issue shares. And so this is a little bit of a bad thing for a potential investor. However, the current liabilities are not like super terrible, I'd say. I mean, yeah, it's less than what they currently have, but I wouldn't be like terrified about the debt that the company has. And the free cash flow is positive here, and it's always been positive. It doesn't seem to be growing, which is a little bit of a concern, but it's at least positive. And you may be wondering how can we have a positive free cash flow and negative profit? You'll see here that the negative net income is actually negative and the free cash flow is positive. Well, that can happen through various mechanisms actually, because net income can be deferred as well. There are things that can be charged today, but they are not affected in the cash flow, because cash flow is about money coming in and money coming out. But if there is an expense for the company and money hasn't been paid yet, you won't see that in the free cash flow statement, but you will see it in the net income. So this is why you are getting some discrepancies, and sometimes you are seeing marginally negative net income and then positive free cash flow. This can be one of the reasons. There are multiple reasons, but it's important to understand that net income can be affected via multiple methods. It could be even depreciation, amortization, deferring some expenses and things of that sort. And free cash flow is actually money in and money out, so it's much more concrete. So, and this is why we like using free cash flow for our calculations in terms of the price to free cash flow ratio, because the price to earnings ratio can be affected by these mechanisms, the depreciation and amortization and all these tricks sort of that you can play with accounting. And they're not necessarily tricks, they are normal accounting principles. So, in terms of the free cash flow of the company here, you're noticing that the company typically makes about $100 million a year. I'm willing to say here, even though they didn't make as much in the last 12 months. But typically I'm assuming that they're making about 100 million. And if we give it a multiple of 20 times its free cash flow, which is 100 million, we're getting $2 billion for its market cap. Right now it's more than that. It's 6.8, but it's not like massively more. Shopify was way more than that actually. And so I think the company's stock is still a little bit expensive. And yeah, you'll see here that also the total debt to equity is very, very high, just because they don't have equity. That's the thing. I mean, they have debt, and not massive debt, like it was like 2 billion or so, but they don't have equity, and that's the biggest problem here. Again, that doesn't really worry me too much, because the debt in absolute numbers, it's not terrible. But I do need the company to start making more cash flow. Otherwise, they will have to actually get money from the market by diluting investors or by getting more debt. The interesting thing though about the company is that it has fallen a lot in price. So this is a company that I'm watching. I still would want to get a bit of a cheaper price. Like if it went around 90, I could seriously think about getting this for the long run really. And even here, if somebody wants to enter, I wouldn't feel terrible about it. but bear in mind that it is still overpriced based on what they're making. Just because, I mean, again, it's they're in the negative and they're making some marginal free cash flow here. They are an interesting company though, and they are enjoying some some growth, as we saw in the net income earlier. And let me find it again. You will see that they are enjoying some growth over here in the year-over-year growth department of total revenues and gross profit, so that's good to see. Yet, you have to be, again, a little bit careful because we don't really necessarily know what they're going to be doing next year. It seems like their numbers cannot really be predicted, and you will see it in the net income. I guess you see like minus 50 here, minus 165 here, and then minus 17. It's a little bit all over the place. However, if they get into positive territory, I mean, this could be a good play here actually, and I would have my eyes on this one. I wouldn't necessarily reject it. Yet, as I mentioned, I'd want to find a little bit of a better value if possible. So if the stock price goes at around 90 USD, I think that would be a prime opportunity for adding a little bit of Wix to a portfolio. That's what I feel about the company. And I have to thank the subscriber that actually suggested that I would take a look on this company. Very, very interesting one, I have to say, and I didn't have it under my microscope at all. So I will keep an eye on that. And thanks again for the suggestion. I love hearing your suggestions, guys, so thanks. And hope you enjoyed the video. If you did, please leave a like, and if you haven't subscribed and you like this kind of content, please do. And I'd love to see you on our Discord channel also. You can find a link in the description box below. Thank you for watching. I'll see you in the next one. Bye bye, guys.